Good morning, students. So this is the sixth video of module 1. So in this video, we are going to learn financial management strategies, and contemporary issues in finance and taxation. So let's start with the financial management. Financial management or planning represents that part of the business plan which is focused on using financial data and projections to put the plan into action. So, financial management strategies focus on the elements such as financial resources, cost structure analysis, profit potential estimation, accounting functions, and so on. Basically, a finance strategy concern itself with the identification of sources, usage, and management of funds. It deals with the alignment of strategic financial decisions with the corporate and business objectives of an organization to gain a market advantage. Therefore, the reasoning behind financial management is to predict your company financial performance in the future. So, this function is based on three fundamental practices: forecasting financials, stress taking key inputs required to drive your growth, preparing for the capital requirements your business need. Moreover, financial management must not focus on short term, instead, it is a forward thinking approach wherein long term growth is prioritized to secure a sustainable financial future. Next is, what are financial management strategies? Financial management strategies are essentially generally principles that your company can implement to reap the maximum benefits out of financial systems and processes. These strategies can be customized to suit your company's specific goals, needs, and means in procuring and utilizing funds. The main goal driving financial management strategies is the maximization of the financial value of an organization. These strategies evaluate financial performance, forecast future financial performance, plan capital structure, manage any other financial activities, decisions that could impact strategic financial decisions. So essentially, finance strategy helps set up a roadmap that companies can follow to manage the usages, availability of resources, and allocation of funds. It works to align financial management with corporate and business objectives of an organization to ensure holistic progress. Next is, why financial strategies are important. The importance of financial management strategies lies in it helping you develop a vision for your company success. It helps you establish a set of controlling principles under which your company can enjoy optimal operations. At a fundamental level, a business strategy is pretty much based on financial strategy. In almost all the business decisions, an organization's asset, cash flow, and the liabilities are bound to be involved. All the business strategies have to manage current business income, external financing requirements, fund procurement schedules, current cash flow position, and annual tax payments. What objective you set for funding, how these tie into your vision is integral to developing a business strategy. Basically, creating a business strategy can be hard without a financial strategy. Financial strategies help you check whether your goals are realistic, tackle unexpected challenges. It also help you understand where your money is going. Beside these other aspects of business strategies that financial strategies help include current financial position. Number two, identifying any risk to your company current financial situation. Number third, identifying the need for financing to fund expansions and operations. identifying and setting income goal for the foreseeable future. Next, identifying sources to look into in order to increase income, highlighting the need for new relationships or partnerships needed to achieve financial objectives, establishing need to hire particularly skills needed to attain the financial objectives set, find the best balance between spending versus saving. So all these are for all these reasons financial strategies are very important. Next is type of financial strategies. So there are four types of the financial strategies: dividend strategy, capital structure planning, investment planning, and working capital planning. Let us start with the dividend strategy. A financial strategy used to determine the percentage of profits that is to be distributed among shareholders after retaining a portion of profit as a surplus for the future investment is called as dividend strategy. It is employed to maximize shareholder return while at the same time generating capital necessary for the future investment purposes. They aim to do this while ensuring the least cost of capital as well as risk. Dividend strategies are basically used to balance current returns and capital gains. Second is capital structure planning. Equity capital, retained earnings, preference capital, debt capital combined are called capital structure of a company. Capital structure strategies are formulated for a company to balance the advantages and disadvantages or risk associated with the equity, preference, and debt capital. Third point is investment planning. Investment planning or capital budgeting is the process of strategizing how to invest capital. After a company acquire capital, one of the steps that come after is investing that capital. Capital investment strategies are concerned with this step, and the investment they usually deal with are in the context of long-term assets. Investment planning is the type of strategic financial management that works to establish, expand, diversify, and modernize your company. It also includes disinvestment practices like selling or replacing old or outdated long term assets. Next is working capital planning. Last but not least, we have capital planning strategies, financial management strategies that help manage the need, procurement, allocation, and future of cash in your company are your working capital planning strategies. These strategies are responsible for the management of your working capital. They also help the maintain availability of adequate working capital that is needed to operate the daily and routine activities of the business. Next topic is strategies of financial management. For your company financial management strategies to work at their best, you need to ensure that your approach when formulating them is as effective as it can be. To do this, you need to keep a few fundamental elements in mind. While these elements can be tailored to suit your organization, some of the overarching strategies that you can tailor are: number one, analyze financial statements. A regular evaluation of financial statement is an important step to take when determining the financial strategies. Being able to read, analyze, and act on the numbers and data that your balance sheet represent can go a long way in streamlining your strategies. Strategic financial decisions can be greatly improved if you are able to effectively utilize your financial statements. These statements help you see your company current financial position and at the same time outline its trajectory for success or failure. By reviewing cash flow and income statement, you can analyze the generation or use of cash as well as company performance. This is especially useful when study according to periodic and annual performance. Equipped with this information, you can ensure that any strategic financial planning you do is thorough and based on evidence. Second is evaluate profit or loss. Closely connected to financial statement, evaluating your income statement, that is profit and loss, is another important step that you can take in perfecting financial management strategies. By building your profits and losses, you can review the cost and benefit of your current business strategies. They help you see what's working, what's not, and what can be tweaked to see changes in these as well. They represent a historical summary of your business performance and thus act as a barometer, a testing tool for the same. You should ideally use your profit or loss or income statements to analyze revenue, cost of goods sold, gross profit, expenses, and net profit. Next is create and monitor debtors. Budgets. Create and monitor budgets. Budgeting is a skill that all managers and decision makers in your company should be adopt. How well you create and manage your budgets will determine how well you are able to stick to the plans of actions that lead to your business objective. By isolating different elements of your team work, you can break it down into comprehensive deliverables list. You can you can then use these lists to allocate budgets, monitor them, reallocate funds when necessary. So having a clear outline budget, sticking to it is also means you can better track your business performance and subsequently communicate the same to the necessary stakeholders. This can then be used to inform company-wide initiative. Monitor debtors. Once a company has been in business for a few years, it is bound to have a set of customers who become returning customers. With these individuals or entities, a certain level of trust is developed, courtesy of which you can provide them with credit purchase facilities. How much money you allocate to credit lines, what is the cap you set on credit purchases, and what strategies you adopt in recovering these debts will all impact strategic financial planning. The better your strategies are at accommodating these factors, the more effective financial management will be in your company. Next is update and safeguard records. Protecting finance data and ensuring privacy in business activity is key to effective financial management. By protecting the data, you ensure that your financial management strategies are free from external influences. If your records are not protected, they are open to manipulation and also frauds. So, the best option you can choose to guarantee the complete security of your financial information is to adopt software that specialize in this task. You can set passwords, parameters, and check to determine who get access to and how much information is made available to who. So these are the some of the strategies which can be used in the financial management. Now we will discuss contemporary issues in taxation. So several contemporary issues not only in taxation but in finance in India are very important. It is important to note that situation may have changed since then. You should refer these information. So contemporary issues in taxation and finance is categorized in these points. So let us see all these points one by one. Number one, goods and service tax reforms. Ongoing efforts to streamline and simplify the GST system. So discussions include potential rate rationalization, simplification of compliance procedure, and addressing challenges faced by the business. So these all reforms are going on under the GST. Second is digital taxation. In India, like many other countries, has been exploring the ways to tax digital transactions and income of multinational tech companies. The government has introduced a digital service tax, which is called as DST, on non-resident e-commerce operators, and discussions on a more comprehensive framework is going on. Next is economic recovery from COVID-19. In India, like rest of the world, has been grappling with the economic impact of COVID-19 pandemic. Government measures include stimulus packages and economic recovery plans have implications for fiscal policy and taxation. Corporate taxation reforms. The government has been working on rationalizing and simplifying corporate taxation to attract investment and boost economic growth. The reduction in corporate tax rates for certain categories of companies has been one such measure. Next is non-performing assets, which is called as NPAs, and banking sector reforms. Addressing the issue of non-performing assets in the banking sector continue to be the priority. Reforms in the banking sector, including recapitalization and changes in the regulatory framework, are crucial for maintaining the financial stability. Next is cryptocurrency regulation. India has been considering regulatory framework for cryptocurrencies. There have been debates and discussions on whether to ban, regulate, or embrace cryptocurrencies, and the regulatory environment in this space is evolving. Next is Insolvency and Bankruptcy Code amendments. Amendments and the refinements to the Insolvency and Bankruptcy Code to improve the resolution process of distressed assets and enhance the effectiveness of insolvency framework. Next is financial inclusion and digital payments. The government has been promoting financial inclusions through various schemes and initiatives. The focus on digital payments and the growth of fintech have implications for the financial and taxation landscapes. Next is environmental and social and governance reporting. Increasing awareness of environmental, social, and governance factor has led to discussions on incorporating ESG reporting. ESG reporting means environmental, social, and government reporting into corporate disclosures. This aligns with the global trends in the responsible investing. Changes in direct tax code. Proposals and discussions regarding changes in the direct tax code to simplify the tax structure, broaden the tax base, and make the tax system more efficiently. So it's essential to stay updated with the latest development and official announcements from the relevant authorities to understand the current state of finance and the taxation in India. So now I'm concluding the module 2. Under module 2, the first part is contemporary issues in the management with special reference to finance and the taxation. So I conclude in that way that contemporary issues in management, if you particularly related with the finance and the taxation, underscore the importance of adaptability. Navigating complex tax regulations, managing the financial risk, staying with the fiscal policies are very much critical nowadays. Effective leadership in the financial management requires a proactive approach, embracing technological solutions, and maintaining a keen awareness of global economic shifts. Striking a balance between financial stability, regulatory compliances, and strategic innovation is imperative for the organization to strive to thrive in today's dynamic business environment. So, contemporary issues in management includes a wide range of challenges and the opportunities like digital transformation. So, embracing and adapting to technological advancement for improved efficiency and competitiveness. So there is a remote work dynamics. So when we address to the complexity of managing the remote teams, maintaining the productivity and fostering the collaboration. Diversity, equity, and inclusion, promoting a diverse and inclusive workplace to enhance the creativity, innovation, and employee well being. So, in contemporary issues, talent management also comes. So, attracting and retaining, developing a skilled workforce in a competitive job market. So nowadays, globalization challenges are there. So navigating geopolitical uncertainties, trade complexities, cultural differences for international business success, ethical business practices. So maintaining the high ethics standards and corporate social responsibilities in the face of increased scrutiny and public awareness. If I just talk about contemporary issue in finance, then various points come in like cryptocurrency and blockchain, climate finance, financial technology, global economic uncertainties, cybersecurity risk, regulatory changes, interest rate volatility, inflation concerns, sustainable finance, remote financing operations. Now let us see all these points one by one. Cryptocurrency and blockchain. The impact of digital currencies and blockchain technology on traditional financial system and regulatory framework. So this contemporary phase is going on in finance. If I talk about climate finance, integrating environmental, social governance factors into investment decisions. So all these things is driven by growing focus on sustainable finance. Financial technology, which is called as fintech, adapting to advancements in financial technology, for example, mobile payments, robo advisors, peer to peer lending. Next is global economic uncertainties. So, navigating through the economic uncertainties, trade tensions, geopolitical events that can influence the financial markets. Cybersecurity risk, mitigating the increasing threat of cyber attacks and protecting the financial institutions and their clients from the data breaches. Next is regulatory changes. So, adapting to evolving financial regulations and compliances requirement at both national and international level. Next is interest rate volatility. Managing the impact of fluctuating interest rate on the investment portfolios, lending, and overall financial stability. Inflation concern. Responding to concern and strategies relation to inflation, especially in the context of central bank policies. Sustainable finance. Meeting the demand for investment that align with the environmental, social, and governance criteria. Remote financial operations. So, addressing the challenges in managing financial operations in remote or hybrid work environment. So, staying informed about these issues is essential for the finance professionals and the organizations to make informed decisions and navigate the complexities of the modern financial landscapes. Effective financial management is a very important in navigating the intricate landscapes of contemporary challenges. Adapting to technological shifts, embracing sustainable practices, and remaining vigilant in the face of global economic uncertainties are critical. Financial leaders must also grapple with the dynamic regulatory environment, the rise of digital currencies, and the imperative to integrate ethical and the social responsible principles into financial strategies. Successful financial management entails a balance between innovation, risk management, and steadfast commitments to transparency and compliances. In this ever evolving landscape, adaptability and strategic foresight will continue to be the cornerstones of the sound financial management practices. If I talk about the importance of finance, so finance is very much important for our business. If we are having the personal commitments, if we have some corporate commitments, societal commitments, for all these, finance is very, very important. So finance is required for resource allocation. Finance is required for business operations. For managing the risk, also finance is needed. Investment and economic growth, personal financial well being, innovation and entrepreneurship. So, finance is a kind of catalyst for innovation and entrepreneurship. So, providing the necessary capital for the startups and the new venture to develop the ideas and bring product or service to the market. Global trade and commerce. International finance facilitates global trade and investment, supporting the economic interconnectedness and collaboration across borders. Government operations. Public finance is critical for government operations, funding public services, infrastructure projects, and social programs. It also play a role in economic stabilization through fiscal policies. Wealth creation. Through investment and strategic financial decisions, finance contribute to the creation and accumulation of wealth, benefiting individuals, businesses, and societies. Finance stability. So, the sound financial system and practices contribute to overall economic stability by reducing the likelihood of financial crisis and ensuring the resilience of financial institution. If I talk about the importance of taxation in our country, is like taxation actually is playing a very fundamental role in functioning of our economy and our society. So it is a main source for generating the revenue. So taxes is main primary source of the revenue for the government. This revenue is essential for funding the public services, infrastructure development, education, healthcare, and other critical functions. Public services. So, taxes enable the government to provide essential public services that contribute to the well being and the quality of the life of the citizens. This includes services like public safety, sanitization, and transportation. Redistribution of wealth. Progressive tax system help redistribute wealth by imposing high rates on those with higher incomes. This help address income inequality and promote a more equitable distribution of resources. Next is economic stability. Tax policies can be used as a tool for economic management. Government can adjust tax rates to stimulate or cool down economic activities, contributing to overall economic stability. Infrastructure investment. Tax revenue is often earmarked for infrastructure projects like road, bridges, and public utilities. These investments contribute to economic development and job creation. Social programs. Taxes fund social welfare program, unemployment benefits, and other safety nets, providing support to those in need and enhancing the social cohesion. National defenses. Tax funds military and defense expenditures, ensuring the security of a nation. Next is healthcare and education. Tax revenue support public healthcare and education system, making essential services accessible to a broader segment of the population. Environmental conservation. Taxes can be used to encourage environmentally friendly practices and fund conservation efforts aligning with the sustainability and goals. Compliance and rule of law. Taxation increase a culture of compliance with law and regulation. It contribute to the rule of law by creating a framework for the fair and orderly collection of the revenue. So, in nutshell, in summary, I can say taxation is a critical tool for the government to fulfill their responsibilities, promote the economic development, and address societal needs. The effective and equitable management of taxation is essential for the overall well being and functioning of a country. And finance is also a fundamental element that is required for all the economic activities, for increasing the growth and the development, and for empowering the individual organization to achieve their goal. Its effective management is integral to the health and sustainability of economies and communities worldwide. So, in this ever evolving landscapes, adaptability and strategic foresight will continue to be the cornerstones of sound financial management practices. So, with this module 2, under module 2, first part, which is finance and taxation, is over. Please go through with the previous videos. There are 6 videos related to this topic. One by one, go through the video and understand this concept in detail. Thank you everyone for watching this video. Please like this video.